Okay, guys. End of market review for April the 13th, right? 2023. So I'm so happy. Like I've been consistently doing this for the past 2 to 3 weeks now, right? And today I executed the 16th trade, right? 16th trade was executed today, and despite the outcome, right? It's I'm trying to document this um journey. All right. I'm basically showing you guys how I'm building a model, how I'm forward testing the model, and I'm also sharing with you guys like my state of mind as I'm doing this, right? And I know sometimes like I might sound very disciplined, right? Very um I might sound like I have it figured out, but I really don't, right? Like this is all part of it. This is all part of the work, right? Because who knows? Who's to say that this model is without flaw, right? That's something that I could still come to find out, right? Let's say we're having a very impulsive market condition right now. You can see the market is just going in one direction, right? The market is going in one direction, so everything is good, right? We're getting trades on a daily basis. What happens when the market starts to range? What happens when the market starts to move sideways, just like this? Are we going to get the same amount of trades when the market starts to move sideways like this? Are we going to get trades on a daily basis? You know, what's going to happen then? What's going to happen then? I don't know, right? I really do not know. So this is the thing about trading. It's very, very uncertain, right? I might end up having to like find another model that works in a different market condition or whatever. But what I'm really just excited about is the fact that okay, I'm building a good foundation right now. I'm building a good foundation right now because the technicals, what I'm trying to let everyone know is like the technicals is not really a big deal. As long as you build the strategy, right? You're able to build your strategy and all of that, that's fine. But building a system and building rules, having rules in place for your system, right? Having rules set in place for your system and all of that, right? Having rules set in place and being able to follow them, being able to like trade your system, being able to apply strict risk management, good money management, good risk to reward parameters and all of that. Being able to stick to a strategy, like it just is a skill, right? It's a skill in itself because this is how professional traders eventually stay consistent because we've all had winning trades. We've all had winning trades in the past. Every single person that watches this has had a winning trade. And you do not have to have some special sort of skill level to have that winning trade or to put on that winning trade. But being able to make money consistently in this market, it requires a lot of skill that a lot of us do not possess. And what I've come to find out is like is more of like a mental skill, right? Is more of a mental skill. Now we've seen very impulsive months, right? We see all of these months very impulsive to the downside, very impulsive to the upside. So maybe during periods like this is over, this is more than 2 years, right? This is more than okay. This is from April 2022 all the way to April 2023, right? Like this is over a year, right, of very volatile markets. So let's say for this whole year that is very volatile, our strategy plays out fine, right? We have a high strike rate. But let's say for like the next year, the strategy performs poorly. Let's say we're not having like very high returns, or let's say something out of nowhere happens, something like coronavirus. Let's just say something crazy happens in the market that is just different. Are we going to switch? Like, what's going to happen? Do you get? Are we going to get setups on a daily basis? Are the setups going to work? What if all the setups fail? All the setups just keep failing? Do you get? Like, a lot can happen. So there's a lot of unforeseen things that can happen, but all of that is out of our control, right? All of that is out of our control, and the only thing that is actually in my control is my ability to stick to my model, right? So, and there's something I've also come to learn as I've been learning as well, because I'm not just coming on here every day to like take a trade. I'm also taking out time to take in more content and learn and learn some more, right? So I've been doing a lot of learning as well, and I still need to do some more learning actually, right? I still need to do a lot of learning, not just some more. I need to do a lot of learning. But what I've come to realize at this point is like, there was a video, there was a an episode or something. I can't remember the exact one, where I was like, we're up. I think we're up like 5 hour, 6 hour, or I think 6 hour. I think we're up 6 hour, and I was like, in a situation like this, if I was trading, if I was funded and I was up 6 hour like this, I would stop trading and I would take that profit, right? And now we're up 11 hour, and it's just crazy. Like, and I watched the video on trading psychology where it's like a lot of traders, when they are in profits, we either want to reduce our risk or want to stop trading and want to take the money and all of that. And it sounds fine. It sounds like the logical thing to do. But let's say I'm funded $100,000, right? And I'm up 6 hour, and 6 hour is like um risking half a percent. That's like $3,000. And let's say I tell myself, okay, I don't have $3,000 in my account. Let me take this $3,000. In my what you're basically telling yourself is like, okay, with this $3,000, I can pay my bills, I can pay my rent, I can pay this, I can pay for this, right? It's all good and it's all fine. But after taking out that $3,000 and then you start trading again, like, what's to say like you might not cut yourself short again? Whereas like, is either that $3,000 becomes your new target. Let's say, what if your model doesn't give you up to $3,000 the next month, and you're expecting $3,000, right? Or you're expecting to make money, or let's say you get like, or you're close to $3,000, or you could just like, your mind could start to make up like scenarios where you could start making errors just because you're trying to get to $3,000 the next time around. Or you could just keep on cutting yourself short and not actually let the potential of the trading model play out, right? So what I'm basically trying to say is like, if I put the money on a pedestal, right, and I say, if I'm up to this amount, I'm just going to stop trading and make that withdrawal and all of that. That comes from fear, because at that point, what I'm saying is, I cannot afford to lose this money. I cannot afford to lose this money. I cannot afford to give back this profit to the market. But the same, if you keep executing the model that made you that money, that made you that amount of money, right? You're going to be consistently profitable. And being consistently profitable is more important than being profitable just once or twice, right? So what I've actually come to realize, and this is not because like I'm up 11 hour, because I still have 4 trades left, right? I still have 4 trades left, which means those 4 trades, I could lose all 4 of them. And even if I lose all 4 of them, I'm still going to be profitable, right? And that's what I'm just trying to say. Like, you can never really tell the outcome. You can never tell the final outcome of the 20 trades, right? And it's the same thing. You can't tell the outcome of each individual trade, no matter the amount of analysis you've done. You can't come into the market and just think you know what's going to happen next. Yes, you could get to that point, but it takes years and years of experience. But you don't start from there. That's not where you start from. You don't start from that point where you're like, where you think you're going to be able to call the market from each point to each point. There are times where you're going to do it successfully, but you can't do it every time, right? And just having that at the back of your mind is very important, especially as a beginner, especially as a newbie. And sometimes we think like being a beginner, even when you're like 4 years in or 5 years in, you think you're still you you might have to do this for like a decade or 2 decades before you get to the point where you can actually start to call the market points to point, right? And really be confident because you need to have a lot of proof to show yourself that yes, I've actually been successful in this industry for a long time. So I know what I'm doing, right? The best athletes in the world, best high performance athletes in the world in whatever sports, right? Even though they were great in the beginning, they were great maybe at the fundamentals, they were great at the basics, you know, they repeated the basics over and over and over and over and over again before they got to the point over a long period of time before they got to the point where now they can start like doing some crazy things, right? And it looks like they make it look effortless, but it's just because of the amount of practice that they've put into their craft. So that being said, um, we can see gold. Gold is heading for our drawn liquidity, the equal highs at 2080. So just like I spoke on yesterday, let me drop down to the 4 hour time frame. We were seeking, I made mention of buy side liquidity above this high and above this high, and you can see price has raided those highs, right? You can see we also respected this new week opening gap, right? This is the gap high and the gap low. Price pushed into this, right? And I told you we spoke on this yesterday where we had these candles moving back and forth, right? And I said price came for buy side liquidity, then it came for sell side liquidity, and then we see price. You can see how price just made this clean run to the upside, taking out buy side above these highs, taking out buy side liquidity above these highs. So this was the move on gold today, right? Was very very clean move on gold today, right? So um okay, so let's go over the trade I actually executed today. I don't know um why is my screen frozen. Okay, I want to quickly drop down to the 15-minute time frame. I'm having okay. So on the 15-minute time frame, I'm on the 15-minute time frame right now. Obviously, you know my trading window. You know my trading window is 230, and let me take price back. Um, let me take price back real quick to this point, and let me drop down to the lower time frame. Let me play price forward a bit. Okay, and now let me drop down to the 1 minute so I can really get to show you my entry. I don't know why my internet is lagging, but let's just give it some time. Okay, so currently on the 1 minute time frame, and you can see obviously the entry that we had for today, right? So this entry, we had this sweep of these lows, right? I'm just pointing it out, right? So something that made this trade high probability, I'm not even going to say so it made this trade high probability, but this trade was in line with our daily bias, right? Is in line with our daily bias, which is good. Most times when you get a trade that is in line with the daily bias, that's really, really good because it makes the trade sort of high probability. But as I've explained, like this strategy has nothing to do with bias, right? Yeah, you can see some even though we've had like a bullish daily bias for a long period of time, we've also been taking majority of my trades are actually sell trades, and that's within a bullish trend. So yeah, so we had this run on sell side liquidity, this equal lows here. You can see where price pierced through it. Then we had this fair value gap. This fair value gap broke this structure here, right? Broke this high here. So that's like displacement, right? Fair value gap broke this high here, boom. Then obviously we marked out the fair value gap, stops below this candle, waited for our entry, got our entry on this candle right here, and then price started to push to the upside, right? And at this point, I'm just looking at price, and this is something that is very important as well. Like with this strategy, right, it's either price takes me out for a loss or takes me for like +2, right? So it's either I lose and I lose completely, or I make two times what I risk, right? So these are my predefined rules, and this is exactly how I've been executing my trades since the 22nd of March, right? Since I made the refinement to my rules. We're looking at coming above these highs, right? Because we know buy side liquidity is resting above these highs and all. So you can see how close price got up my stops. But as you can see, I don't interfere with my trades. I just let them run. I let them run. I don't interfere with them. All right. Price at this point, price nearly got to TP. Imagine seeing price getting to TP and then it does something like this. You can start thinking, why did I not close out my trade here? And what I started saying to myself at this point was, I don't care if price comes back and stop me out. I really started to say that to myself. I was actually talking to the laptop saying, I don't care if you reverse from this point to stop me out. I'm not changing my rules, right? I'm not breaking the rules. I'm not going to interfere with the trade, right? We had some pullbacks, and then ultimately price just went for our take profit. So there could have been a scenario where price could actually do something like this, get very close to your targets, and then reverse back to your stops, and you could start to beat yourself up like, why did I close it, right? So it doesn't really matter. What really matters is like if that's in your plan, if it's in your plan to like manually take profits, then follow your plan. But if it's not in your plan to manually take profits, then don't interfere in your trades, right? Even if price comes so close, because there's obviously going to be situations where price will run in profit and then reverse back to stop me out, right? That is going to happen. So if you're going to be interfering with your trades because of one incidence where that happens, then you don't really understand what it means to be a trader. You don't change your mind, you don't change the plan just because one trade didn't go well, right? As long as you're profitable over a series of trades, as long as you're profitable over a series of trades, there is no need to change your system, right? There's no need to it. So that's basically what it's all about. So this was the trade for today. It was a winning trade, right? I had nothing to do with that. I just followed my rules. I just traded according to my system, right? I didn't do anything special, right? I didn't do anything special. The only special thing I did was to follow the rules of the system. And we came out with a win today. So four more trades left to complete this exercise. And I'll probably take the day off tomorrow to do some other things in my personal life. So I think my next trade will be on Monday. So that means my next video will probably be next week. So yeah, I'll see you guys in the next one. Till then, good luck and good trading.